Hi everyone and welcome to BGL's monthly webinar for November. So I'm your host Jeevan Toki, so a bit of housekeeping. With today's session will be recorded, so if you do miss any parts of it or would like to share with your colleagues, it will be available on our YouTube channel. Any of the recordings will be, in the recordings of the prior webinars are available there on our YouTube channel. A copy of slides will be sent to all attendees as well. Do you have any questions throughout today's presentation? Please enter them there in the Q&A panel. And Aaron and I will come at the end and answer any questions. We do have several BGL team members logged in today who are happy to answer any questions as we go along. As I mentioned, my name is Jeevan, if I haven't met before, and I'm joined, as always, by CEO and co-founder of Smarter SMSF, Aaron Dunn. Welcome, Aaron.
G'day, Jeevan. How are you?
Very good. How are you doing?
Not too bad, thank you. We've had a interesting past month, let's say. So got a bit to share today, especially around our Division 296 tax stuff, assuming that's what it's still going to be called.
Yeah.
I'll give a bit of an update on what those changes to the proposed measures are, and then obviously a bit of an update what we've been working on at Smarter SMSF as well.
Okay, sounds great. Let's get into it. Okay, so on the BGL side, we're covering the last few updates that we have released, and I think the next update that should be 27th November. Not going back in time, but let's go through and have a look at some of the few major things that have taken place over the last few months. So the biggest one I'm going to show here is the member dashboard. So most of you probably would have seen this already, but let's take a closer look here with Simple Fund 360. So I'll go in and select one of my particular funds, and obviously as always, depending which menu structure you're using, you will find the different options. I do get this question pop up a bit. So I'm currently using the newer menu structure. If you do want to utilize that on the app switcher, if you go down to settings, you can enable and disable it there, and that's on a per user basis. So going back now to the home screen, let's go again and select our fund. Okay, so it'll be on dashboards there, or it'll be on the members screen if you're using the older menu. So at the moment, we're still showing the older screens, being the member list, the contribution, member list, there's a couple of functions that are still just in progress that are not quite available in the new dashboard. Once they're available, the old members list will be removed. So let's go across now to the member dashboard. So you would have seen already, if you haven't already, there's now an additional tab. And what we've tried to do is combine, obviously, the existing members list, pension dashboard, and contributions dashboard all into one screen with multiple tabs to obviously present a lot more information that we can do, and a lot more relevant information. So the first tab there is, as the name correctly states, there is an overview. So it's just going to show really for all the individuals what's their overall position. So it's not looking on an overall individual basis. Where individuals have multiple pension accounts, it will show that combined amount and everything that will come through into there. The member screen, previously the current members list, will display obviously the relevant information with some basic contribution and pension information. You can see there on the right hand side. As you do go through and have a look at that, you will see obviously there is things such as when entering in the beneficiaries, you can store them across all the accounts in one process rather than multiple, and other relevant bits and pieces that come through. You've still got functions there to enter transactions and bring everything through. And there's a couple, I think, in terms of the commutation and things that aren't available there, but will be available soon. So pension dashboard, there's a couple little things here. Obviously the pension dashboard will show all the relevant information as it did have previously. You do have access to the reports there, and you can actually project to the next financial year there as well. What you can see for each of the pensions is a basic projected graph there on screen where you can actually go through and obviously look and change the percentages, and obviously then go through and print that page if needed. So you still have that ability to go through and print whatever's on screen in those particulars. It won't obviously save the information that you do put in there. With the pension side, one function we've added, which is new, is the ability to move uncleared pension payments and obviously allocate them towards the pension, existing pension accounts. So it's like, oh, I don't have any unallocated there, but you can actually select two different options there. One is actually meet the minimum. The other is actually to allocate all the unallocated pensions to meet the minimums, and then actually post to the accounts with the highest taxable proportions. So obviously they can be utilised where there is obviously unallocated pension amounts. The last one there with the contributions is obviously contribution cap, similar information to what you see before. And for those that don't know, there's a little show details there to expand and view all the relevant information in terms of what makes up the concessional in terms of the unused 5-year cap and bring forward cap as well. So everything that you need to see is there on screen, and obviously it does have access to the relevant contribution reports there on screen as well. ATO documents. So this is one that's harder to demonstrate, but where you can, what happens with this one is actually, I'll go back one level, is over on the lodgement screen. So if we go here to the lodgement screen. So earlier this year, we obviously updated the lodgement screen in terms of the overview and what's been available. We then actually released the ability to download lodgement data directly from the ATO. So that's actually which forms have been lodged, which ones have not been lodged, etc. And then the last option right here is the ability to download documents. So obviously with this test account, I can't demonstrate that well, but coming back in, what it'll bring through is that once you enable that option, it'll actually bring through all the documents there that are available for those particular entities, I think going back 18 months. And then every 2 weeks, it'll connect to the ATO and download any, I guess, additional documents that have been released within that 2-week period. So there's over 40 different documents which are available there. So as you can see there, a lot of the common ones are around lodgement alerts, debt reminders, release authorities, pay-as-you-go installments, statement accounts, things like that. What we actually do by default with the ATO documents as well is automatically redact sensitive items like the TFN. So once that document comes in, we use our Smart Docs technology to redact the TFN. So that's obviously those documents can be sent out with obviously confidence that you're doing it in a secure manner. So yeah, so the documents which are available there on the ATO APIs, we bring them through automatically. What we're also looking at a later stage, which is probably early next year, is part of the BGL work papers, is the ability to bring in the ICA and IT account transactions and balances, and actually reconcile that against accounts based on obviously the information within Simple Fund, and that's obviously with the ATO automatically. Go on to the next one there, which is entity transfer. So if you're a Simple Fund user, you would have known for years now we've got the ability to transfer an SMSF from one license to another. That ability wasn't, I suppose, available for Simple Invest. So we now have this available, so it allows for trust companies and individual portfolios there within Simple Invest to actually move across from obviously the existing entity and obviously move across to the new one as well. BGL-ID. So one thing I want to point out here with BGL-ID is we've actually, I suppose that is fully available now with both Simple Fund and Simple Invest clients. We are actually doing some work around that. So if anyone doesn't know what BGL-ID is, it's obviously the ability to perform KYC and AML requirements there on your client base. One thing we are doing now is moving this also into a standalone product. So that will mean it'll sit independent of BGL's products. You'll have the ability to request, so it's verify the IDs of those clients, regardless of whether they sit in your BGL products or not. And we're looking to do things such as integrate practice management systems. So if there's something you're potentially wanting more information around, please either obviously put that in the chat or actually, a reply to the email we send out post the webinar, and then one of our team members can get in touch there for you. So last one there, AI assistance. We've made a lot of different adjustments there, I suppose, and a lot more information which is available. So if I jump across into, jump across there into Simple Fund 360. So again, anyone doesn't know, the AI assistant is found up top here on the right. So as long as your user profile gives you access to that. So this allows a bunch of different things that do take place here. So you can actually access information there for the underlying fund. You can ask questions there for the ATO. So I'll show a couple of different ones here. So you can see from here, you're able to summarize the financial information for the fund that does bring through. I can query things such as, in this case, I've asked what is Division 7A and bring through, all that relevant information as you can see there, all going through. The Global Analytics Assistant, this is actually looking at obviously member data across funds. And we've obviously, tying into Aaron's presentation is obviously the Div 296 calculation, which is built in there for that particular fund there as well. This is by default available for users who, it's admins, and account owner users. If you've got a different user role, you need to ask your account owner or someone lower to actually go through and actually enable that option down below. So it's enable the AI system bot there. So enable that option so you can utilize the AI assistants that we do have. Otherwise, you won't see that option on your Simple Fund screen. So jump back to Simple Fund 360. Cool, and I'll switch over there to Aaron.
That was well timed, Jeevan, on the Div 296. So thank you for that introduction. So as I highlighted at the beginning of, I guess, today's session, just trying to get that, click over. You've handballed that for me. Yes, you have. Okay, perfect. Yeah, so I want to break this down into, I guess, two components. So the first is the technical update. And I think the last time I presented here, Jeevan, we spoke about the Div 296 and the fact that nothing had really happened. And a lot of that was because there was grumblings happening in the background about the fact that there was a lot of dissatisfaction within a lot of the Labor backbench, and even to the extent that the Prime Minister's office had started to take a much closer interest in this. So we went from a period of unknown and unrest as to what was happening to now, in essence, Division 296 tax version 2.0. The most important thing here is that we now have in these revised measures, the areas of concern that were raised have ultimately been addressed. And they were around the fact that unrealized capital gains was a byproduct of that first one, which has now ultimately been removed from this. And I'll talk a bit more about that. And then the lack of indexation in respect to how these measures will work has also been addressed through a linking, in essence, to CPI. But what we have seen off the back of these revised measures is not only a level of tax that presents for individuals with total superannuation balances above 3 million, but we also now have an additional tier with an additional level of tax for those that have balances above $10 million. Now, everything that I'm talking to you about today is at this stage simply off the announcement, the fact sheet that the Treasury had provided, and some subsequent commentary that the Treasurer has made at this point in time. Okay, so, and then the final bit there is, I guess, my knowledge and understanding of how the old rules worked and the context in which we can understand from the information that's been provided as to some of the stuff that will happen next. So what is important to remember here, because a lot of the discussion is these headline tax rates of 30% and then 40% where a balance is above $10 million. Ultimately, we still have our fund level tax that applies. So our 15% at the fund level, and it can be as low as zero ultimately, where we have exempt retirement phase income streams being paid, i.e. those that are receiving pensions. The Div 296 tax, as we know, is and will remain a member-directed tax. And therefore, it will be relevant and apply a 15% additional tax, in essence, to what the 15% fund tax is, but it will apply on actual earnings. And again, I'll come to that definition a little bit more shortly, between 3 million and 10 million. Okay, so previously it was 3 million up, whereas now we have a calculation that needs to be done between 3 and 10. And then we have an additional 10%, i.e. a 25% rate on the proportion that is above $10 million. Okay, so it's not 25 all the way through, it's the additional there. So we need to understand what those proportions look like. But we are using actual earnings now, which has been a bugbear of the SMSF industry over time, because we, as an industry, could calculate this stuff. BGL provides us with all the information that we needed to determine actual earnings. The challenge now will actually present itself on a number of the industry and retail funds that might exist. So let's have a look at the comparatives of what was version 1 to what now ultimately is the revised measure. And these are ultimately the key changes. So I'm going to start at the bottom. The start date is we're not applying any retrospectivity to these arrangements. So we now have a 1 July 2026 start date, which means our first year is 26-27, which means we're not going to see an assessment issued by the ATO until sometime during 27-28, once all that information has been reported. We also have an adjustment around how earnings are determined. Previously, we were looking at TSB and an adjusted TSB calculation with the debits and credits for pensions and withdrawals and so forth. We now are moving to a realised earnings approach. Now, there will continue to be adjustments, so there'll be an adjusted determination about what that looks like for, again, contributions and benefit payments and so forth that are taken out. But we are now aligned to ordinary income tax concepts. And this is where I mentioned before about the fact that these income tax concepts that we already know and understand should therefore be applied. The eligibilities for discounts in terms of how earnings would be applied, so on and so forth. The thresholds, as we said before, we had a non-index $3 million threshold that over time was going to see more and more people creep into that. We now have CPI-linked indexation that is aligned to the general transfer balance cap. So the general transfer balance cap is currently $2 million. We know that the threshold is $3 million. And therefore, when we see an increase of the general transfer balance cap from, say, 2 million to 2.1, we will see a 150% or 1.5 times uplift with the $3 million threshold, and then we will see a 500% or 5 times uplift in respect to that $10 million threshold. Now, there are a number of questions that are being asked around all this. Well, what happens if the 2 million becomes 2.1 before 30 June and so on and so forth? These are questions that are naturally going to form part of the Treasury consultation, but it is nice and neatly tied in at this point in time at 150% and 500% as the uplift factors there. Again, we have this kind of single tax rate that we saw before, the additional 15% or ultimately 30% being up to now where we have this two-tiered rate that exists, where we have 15 again between that 3 and 10 mil, and then the further 10% where we get to beyond $10 million. So this is where now it will be important to run these calculations and understand this information. I think this is where BGL obviously Jeevan will have to, and his team will have to do a bit of work once all the information on this with the AI bot. This is where these sort of things are going to become really powerful for you to understand and ask questions about the clients that are impacted, so that you can do some of that analysis around, where is it right to be keeping this money in super or not? And the fact that we're now dealing with realized gains and understanding what the change in value might be over time and needing to sort of model that out and getting some expectations around timeframes to realization become critically important. Now, the other bit in here as well that's worth noting is when we look at this realized earnings concept, I did talk about the fact that we're basing this on the fund's taxable income, which is that ordinary tax concepts that we're talking about, and we adjust for those pensions and contributions, as was the case under those original measures. And there'll be more information that will come from that around death benefits and insurances and so forth as well. Once we get that exposure draft, we'll know a little bit more around that, again, to sort of further the conversation with that. We then, it becomes that obligation for the fund to have to report the realized earnings that are attributable to those people that are what the Treasury call in-scope members, those that in essence have balances above $3 million. So we're going to see the ATO naturally be the gatekeeper of this, because there will be multiple funds reporting balances for total superannuation balance purposes. Now, the other thing that wasn't in the fact sheet information, but we have subsequently seen confirmed by the Treasurer, is we're going to also have an additional cost base that we're going to need to consider on assets for Division 296 tax purposes. Now, a lot of these clients in this category are probably also going to have CGT reset cost bases back at 2017 as well to comply with the introduction of the transfer balance cap. But what has been confirmed is the history of growth of a particular asset prior to 1 July 2026 is not going to be captured within the calculation when that asset gets realized. So it means that we're going to have an additional cost base that we need to attach to the assets of the fund. And it's only the uplift from that point in time that is going to get captured in the calculation for Division 296 tax purposes. So that is something that we're going to see more on. But as I said, the Treasurer has confirmed that is the approach. The other thing that we will require is that we need fair and reasonable attribution of earnings. So trying to look at things like allocating amounts off to reserves and so forth to avoid this is quite clearly going to be in the eyes of the ATO and looking to potentially apply Part 4A. So these sort of things around the fair and reasonable allocation rules within SIS Reg 503, they're the things that we know and exist within the regulations already. And we also know that the ATO has guidance around the use of reserves, for example, and how they would look to apply Part 4A. So these all fit nice and neatly in. So therefore, this is where we expect most of this to land. And then ultimately, it's the ATO will be the one that will determine the liability. And then it is up to the member to then either deal with that liability themselves personally, or they have the ability to ultimately release that from one or more interests that they choose to do from. So the process, again, I don't see there'll be much change in the process from where it was previously to what we would expect in here, because a lot of this design won't really change. So the ATO will be the notification, the party that will notify, obviously, of those that are impacted. We will need to use our Simple Fund software to obviously calculate and then report the earnings share. That stuff is going to be captured within the SMSF annual return on a member-by-member basis. Again, we'll see some differences between TSB value and account balance and that sort of stuff that we'll need to be aware of. The ATO will determine that tiered threshold calculation. No doubt, Jeevan, you'll probably get all that added in so that people will get an understanding of what that looks like anyway, but that does naturally rest with the ATO, given that they're the gatekeeper of all superannuation balances. And then the member has the choice, as I mentioned before, to pay that personally, or they'll pay that via the fund through a release authority, just as is the case currently with contributions and excess transfer balance amounts and so forth as well. So you've probably seen on the bottom of a couple of these slides, there's just I've taken some extracts of some of the commentary that's come from the information that was provided by the Treasury. So where are we at? We're at a point where we've seen the announcement, the revision of this, the fact that Labor has backpedaled due to the pressure that we've seen, which is great. There is still a lot of unknowns at this point. They are intending on pushing ahead as quickly as possible, so i.e. looking to introduce legislation early in 2026. So as soon as possible could be as early as February, which means we need to go through consultation. Now that consultation, I suspect it will be sort of kicking off very, very soon once we see an exposure draft of the legislation, which is really the next step. And then there will be discussions happening within the various streams of the superannuation industry, and the SMSF Association will certainly get an invite to discuss that SMSF sector, along with a number of other stakeholders there as well, and flag many of these issues and so forth that have started to be unpacked as we look at, I guess, the initial information that we've got and the commentary that's sat around it. So a couple of these examples here that I just pulled from the fact sheet just to help understand. So we've got Megan here. She's got $4.5 million as a TSB within her SMSF. So we calculate an attributed earnings rate of $300,000 for the year. So we need to look at the proportion that is above 3 million, which is a third. She doesn't have anything above 10. So therefore, we're applying a 15% Div 296 tax rate on 1/3 on its realised earnings, which gives us a Div 296 tax liability of $15,000. So we're not dealing here with any capital gain or anything that might have happened in there. We're simply looking at what that realised earnings calculation is there. And again, until we know a little bit more about how that would work, but we would need to, again, factor in post 1 July 26 gains as opposed to pre 1 July 26, where in essence there's an uptick of that. So if we then look at this on a balance that exceeds 10 million, and we've got Emma here with just over $12 million, so she has $840,000 of realised earnings. So what we need to do here is we need to look at the proportions that relate to the balance between 3 and 10, and the proportion that relates to that amount above $10 million. And you can see there through that calculation, ultimately we end up in a position where she would be subject to tax on $115,581. So what you're going to see once you start to model this is the realized gain by virtue of having to sell this asset is going to be the spike, or the year that we see that large spike. And there will be a number of examples where version 2 of these rules will end up with a larger Div 296 tax liability than under the old measures as well. The difference, however, being is that the assets sold, so if we talk about the concerns that were raised with farmland or venture capital money or whatever it might have been, having to pay the liability without the cash flow was naturally the area of significant concern. Now, what we'll end up with is, yes, there might be a liability in some instances that is worse, but we're going to have the cash because the asset has ultimately been sold in this situation. So again, just it will need the modeling to understand, and once you understand what some of that looks like, you'll get an appreciation of whether you need to take action or not within the fund and get that timing right. The other part to this was the fact that, and interestingly, if you'd read all the announcements by the Federal Treasury, you wouldn't have even known that Div 296 was actually going on, because a lot of the focus that they actually did with the release of this was around Listo. Naturally, the media really focused on the about face of the Div 296 tax stuff. But what we've got here with the lower income tax offset at the same time is really an alignment of this offset to the changes that we've seen in the SG rate that have ultimately gone from 9% up to 12% over the last 5 or so years, and the fact that we're seeing changes being made to marginal tax rates through the stage 3 tax cuts that were announced a little while back. So what we now have here from 1 July 2027 is we're moving the needle up to an income threshold of $45,000, which is in essence the top of the second tax bracket. The Listo payment moves from $500 to $810, which reflects the 12% SG. And it also reflects that we will see the reduction in the marginal tax rate down to 14% as well. So this is fairly significant in terms of where Labor sits in terms of their superannuation policies and a lot of the discussion that we've seen by Labor, not only in their last term, but in the current term. You can see the number of people that this actually impacts, and a couple of examples here that they use again within the fact sheets. So currently, for someone like Sachi, they should ordinarily be entitled to a full refund of the $594 because of the level of income, but there is a $500 cap at the moment. So we've seen movements in SG, but we actually haven't seen movements in the tax offset amount. Now, if you look at Stuart and Iris, both of those currently would be ineligible. So with the move in the marginal tax rates through the stage 3 tax cuts and also the SG, we'll then see both of those move into that listo qualification there and get the full amount of, in essence, the contributions tax that they would have paid. So I said this is something that does fit squarely inside that objective of super framework that Labor introduced around broader fairness of measures. We think about their paid parental leave, that they've done superannuation payments on paid parental leave, payday super that's obviously coming in, and the objective more broadly as well. So this is expected to impact about 1.3 million Australians. Given that it's a 1 July 2027 update, I think you're going to hear this ad nauseum going into the next federal election as well. So a couple of things there, just from our point of view on our platform. One of the things that we're working on at the moment is, and it's the simple things that I guess in a lot of instances that are the that we see we get the most value of. So we're making changes to our ordering. So you'll see there, we're introducing some tabs there to very quickly enable you to sort of work through the order forms. You'll still have your integration with Simple Fund 360 to be able to pull that data down. But we conditionally are hiding different fields subject to whether you're a member. For example, for payment, in some instances, you'll see there whether you want legal sign-off. So there is our Smarter Legal Review to be available there. And then rather than having a review and submit with that review information, we're actually introducing a modal or a pop-up to enable you to be able to review that. You will still get the confirmation of that order as well, but we're finding in a closed beta at the moment, this is substantially increasing the time and throughput to getting these orders done. So we will, once we've finalized this on our own, on our main platform, our BGL Docs platform that we have that you can access from within Simple Fund 360, we'll be updating this with the existing forms probably early in the new year once we get through our closed beta testing period for the rest of this month. The other thing that we've done, and we've been speaking to a number of clients, those of you that may have your own online forms, whether they are used externally through your own portal, and you might be supporting other advisors or clients, or you use online forms for data capture with your clients. We now have a third-party API that you can connect those order forms to, and that will automatically create saved orders for you around your fund establishments and your companies and so forth. There are a number of documents that we're also working on at the moment with a number of clients in this space, so around death benefit nominations, pension commencement requests, LRBAs and deed upgrades and so forth as well. So if that's something that's of interest to you, again, it's all about efficiency and saving time in terms of the data moving from your forms to capture what you need via our forms to then produce that documentation, to then send that information into Simple Fund 360. This is kind of the way of the world, obviously, moving forward. So we can provide you with access through an API key and then obviously map all that to the endpoints that we have with those 2 or 3 key documents at the moment. So standard companies, special purpose, and new SMSF. And the final thing I just wanted to add here is just around the legacy pensions. So there was a significant milestone that was reached on the 27th of October, which was the fact that any of the asset test exempt pensions that you had, so clients with market link pensions or defined benefit pensions that were there for asset test exempt purposes. So the 15-day sitting period of both houses has expired which what that means is that any ability for any potential clawback of up to 5 years of age pension, ultimately the disallowance period of those 15 sitting days in Parliament has now expired, which means you'll be able to look at undertaking commutations of those sort of pensions as well. So we recently ran a webinar on that. We have uploaded that into our Legacy Pension Hub, which you can access that. We have also updated all the references to that within the Legacy Pension Hub. We've naturally updated our document templates when you generate those commutations to be able to reference that information, and a number of other sort of additional resources to talk about that as well. So if it's an area where you've got those clients and you want to find out more, we're doing naturally a lot of work in this space and happy to help, which you can obviously do that via our platform as well. And then finally, with our courses, we have now got the Foundations course. All the updates are now inside the BGL Learning channel. So that is current all the way through to the current financial year. So those of you that access the Foundations course through there, or got staff that want to use that, you can readily take advantage of that in there. We are still working on our Essentials course. We're actually doing a fairly substantial rewrite of that at the moment, but that is available, but just not yet updated. And importantly, just to note that if you do either the Foundations course or the Essentials course through Smarter SMSF, upon successful completion, you do actually become eligible to get a complimentary period of membership with the SMSF Association. So either as an affiliate member with the Foundations course or an associate member with the Essentials course as well. So Jeevan, that pretty much takes us through to the end of my bit. Any other last bits? I know there's a number of questions that's come in there as well, so we'll get to those in a minute.
Few questions there, but this was something that's going on there in the industry, and I thought I just wanted to share. So OKX, who's one of the digital asset providers, there is performing some SMSF research there on digital assets, so e.g. Cryptocurrency. They're seeking SMSF trustees for one-on-one interviews in which they'll receive a $150 voucher, and I suppose the format's there on screen. So a copy of these slides will be sent to all attendees, so the details will be there. So if you have any clients in mind or yourselves that would like to participate in that, it is something that we will share through with you.